Hey y'all, welcome back again to Sparkle and Trade for yet another episode. If this is your first time here, my name is Bridget, and this is a place where I spread joy and support in the trading community, as well as share my trading journey with you all. I'm super excited to go on this journey with you guys, and I am super excited about today's video as well. Today, this is actually a requested video from one of our subscribers. They commented, they wanted to know about taxes for stock traders, specifically day traders. So we're going to be talking about that because it's the end of the year. It's going to be starting the tax season coming the new year. And just to give you guys a little bit of background, my background before I became a full-time entrepreneur back in 2019, I worked about 15 years in finance and accounting. So I've always been drawn to numbers. I've always been drawn to careers that dealt with money. It's just something that I enjoy, something that I'm good at. And who doesn't like learning about money or managing it? I mean, I guess there's people that don't enjoy it, but I do. So I know a lot about taxes and different things like that. I am not a CPA, so I am not going to give you advice from a CPA. I worked in the finance and accounting industry, but I did not get my certified public accounting because I knew that I would not be in that field. That was not a field that I wanted to see long term. It was just a skill that I had and I enjoyed it. I was good at it and I worked underneath CPA. So just to let you guys know, full disclaimer on that, I am not a CPA. So the advice that I'm going to give you, take it to your CPA and ask them further questions. But I'm just going to give you guys a high level overview of trading for taxes and purposes, tax purposes, and what you should do and what you should take to your CPA and get further guidance on that. Okay. So first thing today, I want to talk to you guys about the trader's tax status. I'm going to link a link below. It's a video that goes into great detail, actually that Teri posted. So today I'm going to be sharing with you the tidbits. I think that video is like over an hour. So I'm just going to take out the bullet points of that. But if you want to like look at the whole video, it's over an hour. They do go into detail about the trader's tax status and the different things that you can write off. But I'm just going to be giving you bullet points from that video and then personal experience as well. So first things first, if you want the IRS to see you as a trader, as a business, then you have to get your trader tax status, or what they also call as M2M status, which is market to market status. In order to do that, you have to have you have to trade 4 times a day or 60 trades a month, 4 times a day as a day trader and 60 times a month. They want to see that you are really a day trader. You also have to you have to have money in your trading account consistently. You have to spend the majority of your day as a trader. Now, the way around it that they were describing is you can teach trading. So, if you teach trading in any capacity, that also will qualify you for trader tax status if you don't have the 4 times a day or the trading 60 times a month. Now, I don't know if you have time to try to sign up for that right now because it does take 2 months to get your trader tax status. And I'm not even sure if you could do retroactive. I'm not even sure. So, but this is information for you going forward so that you will have your trader tax status for 2021 that you file in 2022. Because most people that don't have it right now, I think it might be a little bit too late to get it for 2021, being that it does take some time to get your trader tax status, unless you have an accountant that somehow can speed the process up. The reason why you want trader tax status is if you do not have a trader tax status, let's just say you lost, $20,000 this year trading, right? That's in your eyes, a business loss, because if you're a full-time day trader, you look at this as a business, right? So that's how you make your income. Well, if you lost $20,000, if you do not have your trader tax status, the maximum amount that you can deduct on your taxes next year is $3,000. Now you can roll over the rest, $17,000 to next year. But again, in 2021, you can only you can only deduct $3,000 from 2022, right? And then going forward until you get trader tax status. But once you get trader tax status, you can deduct the full $20,000 for that year. So if you lost 20,000, if you lost 10,000, whatever amount you lost, you can deduct the entire amount as a loss to your business because you have the trader tax status. So that's the benefit. The second benefit is you can deduct business expenses. So if you have like, computer stuff that you use, if you have a subscription program that you use for your trading, if you have office supplies that you use, anything that you use that basically helps your business function. If you got a new computer, the cost of that computer could be deducted as a business expense. If the majority of your thing that you use on your computer, like a lot of times if people trade TradeStation, they will buy a Microsoft computer because they want to upload the desktop version of TradeStation, and you can't do that on a Mac. So they'll buy a Microsoft computer and just use that computer for trading. They could write off the full deduction of that computer on their taxes once you get trader tax status, all types of things. And then if you start to teach it, anything that is involved with your teaching of the program or teaching of any type of trading, you can also write that off. A way around, like, let's just say you don't know how to teach it. If you share a program, like if you share somebody else's teaching, then that is also, or even if you share your journey of teaching, that is also a qualification for you to become trader tax status, or show that you are doing trading as a business, the teaching part of it. Let's see what else. M2M status. So there's trader tax status and M2M status. Take both of those information, find an accountant that you prefer. I mean, I would say go to somebody that actually knows the industry, right? It will be very difficult if you go to an accountant that doesn't understand or know how day traders function, and they will have to get caught up on all the laws and all the things that apply. So I would suggest you find a day trader accountant, somebody that understands investing, understands stock market, taxes, that understands all of that and understands the laws that are changing. They change all the time. So you need somebody that's up to date on this stuff. You don't want somebody that is that don't know what a day trader does or needs to get like caught up to date on what a day trader does. So that's my 2 cents about taxes in general when it comes to day trading. Going forward, also, if you are a business owner, so let me just give you guys I had a few questions about this. Somebody asked me, when did I become a full-time day trader? I became a full-time day trader in August, and they were like, did you quit your 9 to 5? I didn't have a 9 to 5 before when I learned how to trade. I have been a full-time business owner since 2019, and I have other businesses. I have about 4 different businesses that I do, and my husband and I together. And it wasn't until I learned day trading that I started to do less of that and more of this. In terms of my time, my energy, and my resources, I have found day trading gives me the best return on my investment in time, energy, and resources. So I could put the same amount of time, energy, and resources into the other things that I'm doing, and I do not get the same return on investment. So logically, I decided to put more energy and resources into day trading, and I became a full-time day trader in August of this year. That is after I hit the $1,000 in a day club in my SIM account on July the 2nd, and that is also after I hit the $1,000 in a day club in my live account in August, early August. So after those 2 things happened, I said, okay. And if you're new to my channel, you don't know the story behind how I became a full-time day trader, go back through, watch my initial video that talks about the Invest with Teri program, which is the program that I learned how to trade. Go through and talk. The second video that you want to see is, can you really make $1,000 in a day? That's the second video that will give you background about my journey so far. I just don't want to repeat a lot of this stuff because I already created those videos, and I think that sometimes the questions that come up it can be answered just by watching those videos, to get a little bit more about like my journey and why I decided to go full-time day trading. Now, I do believe that this is the best, in my opinion, once you really learn it and you learn how to manage your emotions. Y'all, this whole channel is about helping y'all manage your emotions. Then you will be best positioned to build wealth in the shortest amount of time. I think you don't want to rush anything. You definitely want to take your time, but this whole program and this whole way of being is, to me, like, this is how the wealthy does it. They don't, they don't teach this in school. They don't teach this in a lot of colleges unless you go to a specific finance school or finance college. And they don't teach this everywhere, because if everybody knew this, then it would be a no-brainer. Yeah. And not to say that trading is for everybody, because I truly don't believe day trading is for everybody. I think that it requires a certain level of emotional control. And I've asked people ask me on this channel, somebody said that they lost their job and they only have a little bit of money. They want to throw it into trading. I wouldn't do that. I mean, I feel like if you have $3,000 to your name, then you need to get stabilized first. Because if you go into day trading with the mindset that this trade has to work, then you're already going in on emotion, because you're clinching the trade, and it has to go in your direction that you go in. And if it doesn't, then you would have lost some of your money or all of your money if you don't go in there with the right emotional stability. You have to go in there thinking, I can lose this or I can gain. You can't go into trading like clinching the money. Like, you have to have a little bit of release, and that is an emotional thing, because definitely when you do the strategy that I do, which is like vertical credit spreads, the iron butterfly strategy, if you do not go into it like, okay, I did my technical analysis, I believe this trade is going to go in a direction. If you don't go in there thinking, okay, I did everything I could do, I put my risk management in there and I'm ready, knowing that you could lose some money or you could gain a whole lot, you have to be okay with either outcome, or you're either going to get out the trade too quickly, or you're going to stay in the trade too long. I see that happening. People get afraid and they get out, or they stay in it too long. Like, they don't have their stops in place. They don't put their risk management in place, and they're not sure what amount they're willing to lose. You have to have a certain amount that you're like, okay, if I lose this amount, and it can't be, like, if you're like, okay, I want to make $1,000 in a day, and your risk is like 50, I want to lose $50. I don't know, because sometimes the trade goes down before it goes up. So you just have to make sure you have your stops in the right places, which again, Teri teaches you how to do that. She helps you learn your risk management. I got the link in the profile bio. I'll tell you guys that every video, because it's too much to teach. I can't teach it. It's her course, but it's worth every penny, and it's worth the time to take your time to learn your own technical analysis. So I wanted to talk to you guys today about taxes because somebody asked me. I hope this helped. I gave you guys like the bullet points of the long version of their tax video that they did. He goes into discussion. She's actually talking to I believe he's a CPA. He talks about, deductions, business owner deductions. I know all about that stuff. I've been doing that for years. I've been a business owner since 2015, went full-time in 2019, didn't really make no money until 2016. So I feel like I made all the mistakes, but now that I found something that I like, I'm good at, that I enjoy, this is what I'm going to be doing going forward. And yeah, I still have my other business on the side, but it's not like I'm not putting a lot of energy into those things anymore. Let's see here. Oh, one last thing that I want to talk to you about when it comes to taxes as a business owner. If any of you guys are out there, you're like me, you have other businesses. There are two things that I want you to know, and you have to decide. I hear all the time, like people asking about write-offs and deductions. And so if you lose money in trading, of course you can write off a deduction. But if you're looking at this as a business and you're looking at this as something that you want to do long term, do not get into the habit, whether you're doing it in your trading business or your other businesses, do not get into habit of just finding out all the deductions that you can write off. That is not good for you. That mentality is not good to have. Let me tell you why. So a lot of people like to live like the tax-free business life, right? They write off all these deductions on their business they actually do qualify for, and great. So at the end of the year, you don't owe any taxes. You know all these expenses were tax-free, or you were able to write them off on your taxes, and those are business expenses, et cetera, et cetera. Well, once you write off all of the deductions, let's just say you made $100,000 in business income. After all your deductions, your IRS tax, your IRS tax thing says that you made, $30,000, right? You don't have to pay taxes on the 100,000. You have to pay taxes on the 30. So it means you owe less in taxes. That's what a lot of people do. Well, the problem with that, the downside of that is, let's just say something happens. For instance, a pandemic. I don't think a pandemic gonna happen again like it was, but if a pandemic did happen, and they said, okay, you qualified for these grants, but we're going to go off of your net income of your business. That means the amount after your deductions, that's the amount of money that we're going to give you in grants, the much how you qualify if you look for a bank, PPP loan stuff, all the stimulus money. The stimulus money was based upon their net amount. So while they did make $100,000, they deducted so much money that they only came out with $30,000. The people that did that, they deducted $70,000 in business expenses, and they may not even have had to, but they figured out a way to do it. And now they came out with their IRS report showing you only brought in $30,000. So your grants, all the stimulus money, is not based upon the $100,000 of income that you actually brought in. It's based upon that $30,000 of income. So that's the downside, because a lot of people could have gotten a whole lot more grant money, stimulus money, PPP loan money, had they did it the right way and just deducted what they could and not what they should. Okay, or flip that around. They could have deducted what they should and not what they could. They would have came out on the better end. So the banks look at a business that has a net income of a decent amount as a healthy business. If you have either like negative, that's not a healthy business. So if you're looking for funding of any type, or you want to get funding for your business of any type, then you should not get into the mindset or the habit of deducting all this money. Like, you should it doesn't show a healthy business on a banking or finance perspective. But a lot of people do it. They get into that trap of just deducting so they don't have to pay the taxes. Well, that doesn't show a healthy business. Again, if you wanted to grow or expand and you need additional financing, then you have to show that your business is healthy. The way you show that is your net income is a good amount and profitability. You are a profitable business. So again, like the pros and cons, I just want to share that with you because a lot of people want to do the deductions. Definitely when it comes to day trading, just deduct what you should, not what you could. And don't over deduct. I see videos out there of people telling all these people about ways you can deduct money. Yes, it works if you are, if that's your strategy, but I don't see that as a long-term strategy. I don't see that as a real way to build a business. A lot of people do it. Amazon did it. Amazon literally paid $0 in taxes a couple of years ago, and that's fine. That's the way Amazon did it. But I'm just telling you guys, moving forward, for the average business owner, you just starting out and you want to expand and grow and you need additional capital or funding, or you want to qualify for different grants like the ones that came out before, you have to show a realistic perspective of what's going on in your business, and you don't want to like change those numbers to make it fit what you want to do. You want to make sure that you are reporting realistic things so that if you do have an opportunity to expand, grow, or get additional funding, then they won't look at you like your business is losing money. We're not gonna work with you, you know, and they go off your taxes. A lot of times you go give me your business taxes. So just wanted to share that with you guys and to give you guys a little bit of information. Again, if you want more information about specifically trader tax status, I'm going to link the long version of the video that Teri did with the CPA below. Go ahead and look at that. It's like a little bit over an hour. He explains more, but I just gave you guys the bullet points of what I got out of it, and they go into more detail. So I hope that helped you guys. Let me know if you have any additional questions or you want to see a specific video about a specific topic. I will be happy to do it. The next video that I'm going to be doing is we're going to be financial planning for 2022. The purpose of financial planning in the trading is to, again, manage your emotions. It's going to help you set you up for clear expectations. It's going to help you set yourself up to, like some people said they're ready to leave their 9-to-5. Okay, how do you do that? Okay, well, this is how you do it. We're going to financially plan so that you have a goal, so that when it's time for you to make a jump and it's time for you to do things on your own, you are ready and prepared for that, and you don't jump too soon. Okay, I hear about the great resignation. I understand that people have things that they want to do in life, but there is a way to leave your job, your 9-to-5, the right way, and not just make a very erratic jump, you know, a trendy jump or something that you're not prepared for. Definitely, if you're going into day trading, that's going to be our next video. I'm going to go into more detail about that and kind of like how I did it. Even though I didn't go to day trading, I took the jump to make the leap. But why I make a leap, how I make a leap, all that stuff. That's going to be our next video. All right, guys, let me know if you have any questions. I look forward to continuing this journey with you guys. Turn on your notification bell. Comment below what you thought about the video. Subscribe, all that jazz. Y'all been great at it, and I'm just enjoying growing this community and doing life with you guys. All right, have a good one. Have a good one.